Good morning, everyone, and welcome to Coffee and Conversation with Kristen. So today we're going to talk all about second opinions, why it's important to get a second opinion. Now, as a lender, whenever I hear, Kristen, I'm getting more than one opinion, obviously I want to earn your business, right? But I do completely understand the need to get a second opinion. And any lender that truly put their best foot forward, knows they gave it their all and they're being forthright with you, will either A, earn your business, or B, understand that maybe they're just not in the market that day. Here's why. We at Guaranteed Rate, we really feel, and I feel that our rates are very aggressive, meaning they're very competitive on a daily basis. However, are they the best rate every single day? Maybe not. It kind of depends. Lenders come in and out of the market all the time. Now, we've talked about rate sheets, buying rates, and those kind of things, but I wanted to get a little bit deeper into that, meaning when I get a client, I get clients quite often, weekly, daily, sometimes, getting a text message or a phone call just saying, Kristen, what's your rate today? Lenders don't typically have just one rate, okay? And here's why. It is a loaded question when you ask a lender for their rate. Now, if they don't know your credit score, if they don't know the type of home you're buying, meaning are you buying a condo? Are you buying a single family? Are you buying a 2-unit? Are you buying a manufactured home? Those things all could potentially change that rate. Term, are you doing a 15-year, 30-year, 20-year, any other year in between? Those could change your term. Are you doing a fixed rate? Are you looking at an adjustable rate mortgage? These are all things that are factored into rates. So while I would love to just say, hey, our rate is today, it's not fair to you because I'd be just throwing you a rate. You have no idea if that rate comes with points. If it doesn't come with points, is it at the top of the rate sheet? Is it for a single family home when you're looking at buying a 2-unit investment property? All those things are different. So when you're shopping, it is very important to get more than one opinion. I would also say you don't want to get 5 or 6 opinions. It can start to get messy then. Lenders don't maybe necessarily understand, so it could not be apples to apples, meaning if you have too many opinions, it'll get confusing and it will do probably more harm than good, okay? But I'm always an advocate for at least 2, even maybe 3, if you're still not sure. Okay, not only are you shopping the rate and fees, but you're shopping the lender. You need to understand how they work. What are they going to do for you? How are they going to communicate through the process? There's a lot that goes into that. So it might not always be about the best rate, you guys. There's a lot of servicing. There's a lot of other things that go into there. While rate is extremely important, and I'm very well aware of that. Okay, couple red flags. Red flag number 1. If your lender is telling you they cannot lock your interest rate until your loan is back from underwriting, meaning you've been in contract, you're in contract, this would be based on a purchase, you're in contract, you have lender all their information, they now submit it to underwriting and they can't lock you until you're approved. Red flag, get a second opinion. You should be able to lock that interest rate the second you get into a contract and you provide that contract to your lender, okay? Pre-approval application, all of that should already be done. You get your lender the contract, they should be able to go into their system, give you a quote and get you locked in. Right now, rates are still a little vulnerable, so make sure that you're taking advantage of the lowest rate possible. That's why waiting for a lender to get that loan out of underwriting, which could sometimes take a week or 2, could be too late on your rate. Get it locked. Work with a lender that's going to lock your rate right away. 2, make sure the lender knows the type of property you're working with, okay? I just had a scenario where the gentleman called me and he sat on his contract. Well, he didn't sit on his contract. The bank sat on his contract for 2 weeks before they called him and said, hey, Mr. Apple, we don't finance this type of property. Okay, either the lender wasn't aware that that property existed or they just didn't look at it. It is not okay for a lender to sit on your contract for 2 weeks before they let you know they can't lend on it. They should be letting you know that within 24 hours of getting that contract, meaning they've got the contract, they've reviewed it, they've put it into their system, they know exactly the type of property is and getting you on your way. It's also very important to have that conversation prior to getting in contract with your lender to make sure they know the type of property you're looking at, meaning condos, modular homes, manufactured homes. There's a lot of different property. Like I said, 2 units, those could be a little bit different on the financing side. So make sure you're letting your lender know that type of property. If it's a regular stick-built home, they should be able to do it. So if they can't or they're changing all the terms on you without letting you know that, get a second opinion. Huge red flag. Okay. Number 3, The lender is pressuring you into an adjustable rate mortgage. I can't tell you how many times I've heard and had taken client calls in the last couple of weeks where they're like, Kristen, the current bank I'm working with said that as long as I put 20% down, then I could do a fixed rate. But if I didn't, then I need an adjustable rate mortgage. I'm here to tell you, we offer low down payments on fixed rates. We're talking 0 to 3, 5% down on fixed rates. Do not get pressured into adjustable rate mortgage or an ARM if this is your long-term home. You don't want to have to worry about refinancing in a couple of years. The worst thing is not only refinancing to a higher rate, but then have to pay another set of closing costs to get that higher rate. Just understand A, what an adjustable rate mortgage is, B, how long that adjustable rate mortgage is, and C, do you have to take it? Or is there a better option on a fixed rate where you can be solidly in your home and confident that payment is going to stay relatively the same throughout the duration of your home? Meaning the only thing that would really change on the payment would be your taxes and insurance. Fixed rates, remember, you guys have the same exact payment for the entire term of the loan. Lastly, let's talk about those free closing costs again because they don't go away. I know I shouldn't be laughing about it, but it just amazes me that there's still loan officers out there touting that they're going to pay your closing costs for you, okay? We can't just pay your closing costs for you, okay? Now, as we said earlier, there's a difference in the rate sheet. If you take a higher rate, you can get a credit toward your closing costs. You heard me right. So if you have a lender that's not charging you any points but paying all your fees, you can probably get a lower interest rate. They're covering those fees in the rate, meaning you're giving yourself those free closing costs. They're not paying for them for you. Remember, a lender maybe can waive their own fees, but they can never waive or just not pay or give you a free appraisal, free title, insurance, free deed and mortgage, notaries and recording at the municipalities. That's not possible. Those are all third-party fees that we can't control, meaning that there is a cost to them. Now, if they are rolling them into your rate, it's better that you know what the other rate option is and what that savings could do to you over time. You might be paying $10,000, $15,000 and taking a higher rate versus a $2,000 in extra costs, right? Or opposite. I've also seen where they're not only charging a higher rate, they're also charging a point to pay that higher rate. Remember, 1% is 1 point, and that is based off the loan amount. If your loan amount is $200,000, 1% is $2,000 on top of the fees. Then if you're getting a credit back, you're giving yourself that credit again. So just make sure that you're getting the best rate and fees possible. Now, again, if you have a loan estimate and you want to send it over to me, I'm happy to look at it, go over exactly what's on it, what we can do for you. You may save a little bit of money. You may save a lot of money. You may be in really good hands. I'd love to be able to help you out on that. And again, don't charge anything to do that. It just takes a little bit of time. This is your loan. This is your long-term financing. You really want to know and understand what you're doing, what you're paying for, not only now, but how it's going to cover you in the long run. So please, if you are not getting a second opinion, I really advise you to start. And it is important to make sure that you're getting the best deal for you. If you have any questions at all, please drop a comment below. My contact information is below. You can call me, text me, shoot me over an email, and I'd be happy to help. It's really important right now, especially with rates still as low as they are, that you are set up in the best possible mortgage for you. Again, comments, information is below. If you know of anyone that would be interested in hearing more of this, please share it. Otherwise, like and subscribe to this YouTube channel for more mortgage education. We'll start to get this all figured out. And like I said, this stuff can be as clear as mud. So we want to make sure that you understand as much as possible. Have a great day, you guys. I appreciate your time. Thank you.